Hello and good morning from Europe. It's Tuesday, September 2nd, the second day of September. We are going to watch again the economic calendar, what we had in the economic calendar yesterday so far, and yesterday and today so far. And then we can check the market's reaction, our expectations as well. Yesterday, Chinese PMI gave some recovery signal while in manufacturing. So generally, the manufacturing PMIs yesterday from China, Australia, and European countries, generally they were better than expected. We talked about that. The manufacturing sector is getting slightly better, but at the same time, that other data which we had, especially about trade balance or export and import, generally the trade data, they are showing that overall economy, overally in most economies, especially in China, Australia, Japan, and New Zealand, which we had in South Korea, which we had during the last days, we can see that the export is falling down. And this lower export, at the same time, the imports also slowing this generally, but the export is falling much more. And that shows that the international demand is getting slightly weaker. In United Kingdom, the house price fell by 0.1%, while the market expecting 0.1% increasing. That per month ago in July, the housing price increased by 0.5% in United Kingdom. Eurozone manufacturing also, as mentioned, mostly they were fine, increasing thanks to Spain and Italy. The whole Eurozone manufacturing index increased above 50 and printed at 50.7. New Zealand building consumption and state spending also increased, showing some recovery in the housing market. We had this slightly recovery in other economies as well. Australian manufacturing PMIs hold stronger above 50 at 50.53. Slightly stronger than expected. Japanese capital spending increased better than expectations. We know that about the Japanese central bank and BOJ decisions, we can talk a little bit more. We have some mixed data at the same time from economic activities, export, import, which may say that, yeah, the economies need more support, while the inflation also slowing down. But at the same time, we can see earlier today, the data published, we will talk later about that. We can see that the Japanese bond yields is increasing. We will talk about that later. That's mixed data. Don't forget about the Japanese central bank. In South Korea, trade data, as mentioned, it was missing the expectations, and especially this export, they were weaker than expected. The PMI numbers also showed that the Korean economy may get some slight pressure in the short term, at least, to get better. Australian job seekers and job advertisement gets better, so it means that the companies, they are seeking for more jobs. So maybe we can see a little bit better than expected. In a recent month, generally in overall economic, especially in manufacturing sector, we can see some recovery in Australia, New Zealand, and China. And I mean, Australia and New Zealand also, they're following the Chinese trends somehow. Building data, we're mixing Australia. When we are talking about the mix in the short term, we can see some recovery, same as what we saw in United States as well. But when you're when you want to compare these data with the historical data, you can see they are not such a good numbers as well. Indian manufacturing PMI hold strong at 59.3, slightly above the July's 59.1. That shows that the Indian economy is again moving. Russian economy even thought the PMI printed under 50, but increased from 47 to 48.7, which means that the economy is moving slightly better. Turkey's second quarter GDP jumped by 4.8%, much better than 4.1% expectations, and previous quarters increase of 2.3%. The unemployment rate also, we could see previous week with that it fell to 8%, which means that the Turkish economy moving slightly better, probably after the central bank and government policies. In Italy, unemployment rate fell to 6% from previous 6.2%. Comparing with the unemployment rate in the Eurozone as well, generally, we can say that the European Eurozone unemployment rate also, which fell to 6.2% from previous 6.3%, it's I mean, it's near to record low and below the 6.3% overall 12 months average. So generally, the labor market moves better, especially in Italy, Spain, and Portugal. UK credit and mortgage rates, mortgage data, they were stronger as inflation rates slightly fell by 25 basis point previous meeting, and it's expected to fall further. They cut further in Bank of England. That's why the mortgage rates also slightly fell, decrease, and that helped the increasing for demand for the mortgage demand and credits and mortgage rates. So they were better than we had better activities. While the manufacturing PMI weakened in August in United Kingdom, S&P Global Manufacturing PMI fell to 47 from previous 48 and even missed the 47.3 expectations. Generally, the South Africa manufacturing PMI continued falling down. In New Zealand, the New Zealand trade balance, they were slightly, when we are looking at the data, generally the trade index rose by 4.1%, beating the 2.1% expectations, but export price rose. We had we can say that it's like inflation for the export inflation increased by 0.2%. Then on the other hand, export price increased, but export volume fell. Fell by 3.7% from previous increase. But the previous month, the export volume increased by 4.6%. But in August, in the second quarter, we could see that the export volume fell. That shows again the overall global market demand is weakening. Japanese monetary base, monetary base decline. That is another factor that the central bank is trying to control the inflation. Even thought if they didn't increase the rates in a recent month, they held the rate at 0.25%. But still, we can see that the inflation is getting lower. That's one of the reasons this Japanese monetary one of this is the reasons Japanese monetary base, which fell again, continued falling by 4.1%. Generally, in the past 12 months, Japanese monetary base declined by 2.8% in average in past 12 months, which means that the Japanese, trying to, with the less liquidity or lower liquidity trade, you're trying to control the inflation, which actually we can say that somehow the market also accepted that or bought that. But on the other hand, we can see that the Japanese 10 years bond yield or JGB yield or JGB the yields for JGB, sorry for a second, my mind went somewhere else. The yields for the JGB or yields for the Japanese bond increased to 1.61%. That's amazing number. It's just like the highest level since 2011, while the average of past 12 months average is only 1.1%. That means that the Japanese bond yields, Japanese bond market is getting very strong and signaling that the real rates should be much more than 0.25%. That can support the central bank to increase the rates. Even though the other economic data, they are not supporting these. The idea of a rate hike, but these data confirms that the real markets. The real rates in the markets is much more than what the central bank giving. So that's why we can expect still the rate hike. Later today, the inflation data will be more important to watch, especially in Eurozone and Eurozone and European economies. In Italy, we're going to have PPI number, Eurozone economy, Eurozone generally, the inflation is expected to fall to 2.2% from previous 2.3% for the core data, and headline inflation from 2% to increase slightly to towards 2.1%. Generally, the data can probably shows that in the short term, inflation will be slightly stickier, and that can support the idea of holding the current 2% interest rate for the central bank, European Central Bank, to see more data before making any big policy change. In Spain, we have to, sorry, we are waiting for labor market data as well. GDP data from Brazil shows that in the second quarter, Brazil GDP and economy moves slightly weaker. That their main reason is because the higher interest rate that we had, which it couldn't support the economic growth, but Brazil Central Bank, or BCB, started to cutting their rates. Previous month cut the rates. This month also, probably despite the slightly weaker, slightly recovering the inflation, but probably Central Bank of Brazil, they're going to continue cutting their rates. That can support the economy for the third quarter, but the second quarter was not such a brilliant quarter for the Brazilian economy. But generally looking at the bigger picture, the Brazilian economy is moving fine, in line with the Mexico, in line with the India, in line with the Spain, in line with the Italy. They're going to be the next giants of global giants in the economy. We have to watch and take care about them. Today's main data should be the United States manufacturing numbers, manufacturing producer price. I'm sorry, manufacturing PMIs, Purchasing Managers Index. Both S&P Global and ISM, they're going to publish these data, and we expect to see, especially for S&P Global, we expect to see the PMI, manufacturing PMI, to jump to 53.3 from previous 49.8. Generally, that can shows that the economy in the United States still moving forward and moving fine. That can support the US dollar index as well. Generally, if looking at the charts, you can say that what we can see in the charts as well. I mean, the technical charts also, they're showing that despite the slightly weaker market, I mean, weakening or sliding the market risk with the VIX around 16, 17. I mean, it's not such a low as well. Still, the market has some concerns over the geopolitical tensions in Ukraine, but still, the VIX is around 60 point, is around between 60.9 and 17. That can shows that while the market risk is low, but still there are some risk. And with this expected data, we can say that the dollar index, which fell under 97.50, again increasing towards 98. And for the first half of the week, we don't expect to see the dollar index above 98, but for the second half, while we're getting closer to the labor market data, probably we can see the dollar index above 98 again, as we're expecting slightly stronger labor data. I mean, the dollar index recovery shows that the more demand for the safe havens, increasing the geopolitical tensions, and falling in the stock markets. All these data confirms that gold price to move above 3,500 earlier today. Now it's trading around 3,493, but generally the market is positive. That's the area that probably we can see some correction, but generally the overall data is overall market trend for gold still is a positive, and we have any reason to say that the gold should lose the momentum. Same for the silver, we can say, and for the energy, WTI and gas, both of them, they are in general uptrend right now. The gas may lose the momentum slightly, but as long as the tensions moving forward and tensions increasing between US and between Ukraine and Russia, and United States and Russia, we can set the bigger picture. Still, we are positive about the oil, but the geopolitical PMI, yesterday's PMI numbers also actually manufacturing PMI supported the energy price. Today's US PMI also should be in focus. At the same time, the geopolitical tensions generally all these data can support the idea of holding the countries, but overall lower export and lower import there, it means that we cannot expect the oil and energy price to move towards so much. However, about the gas should be a little bit different, the condition, because of getting closer to the winter. In the stock market, S&P 500, Dow Jones, and Nasdaq, all about It's like taking a profit one side, concerned about the economic growth in other side on other side, and also the trade tensions again looming on the stock markets. And we can see that all the main indexes, S&P 500, Nasdaq, and Dow Jones, they are falling down. On the other side, in the cryptocurrency market, we can see that the Bitcoin increasing. Bitcoin above 109,000 can recover towards the positive area. Under 106,000 can turns towards negative area. We didn't see the price still under 106,000, so still we can see that about 109, we can still count on higher prices. That's the general market condition. Hope it was useful for you. Take care about your trades and open and close positions. Have a good time. Talk to you tomorrow. Bye-bye.